markets and market analysis, you'll see stuff from like the top investment banks, Goldman, JP, just you go down the list of your top 10 investment banks and their top analysts, and all of them will have a different opinion on where the market's going to be in 3 or 6 months. And these people are paid huge salaries to all day long sit and think about where is the price of the S&P 500 going to be in 6 months. Okay, let me tell you something. Nobody knows where the price of anything is going to be in 6 months. Anyone who claims to know where they think the price of an asset is going to be in 6 months is full of shit.
All right, welcome everyone to Twin Shores Financial Freedom Podcast. I'm Timothy Nihil, host and CEO at Twin Shores Financial. In this podcast, we have our friend John Devine, who is an over-the-counter trader at Blockfills, so digital assets, OTC. John is a tremendously knowledgeable person, has a deep background in the trading world and what really goes on behind the scenes, and now spends his time trading digital assets at Blockfills. So in this episode, we're going to talk about the state of crypto, what we're seeing behind the scenes, talk about different trading strategies and how to rethink your investing in the digital asset space. It doesn't just have to be buy and sell and hope the spot price goes up and down. There are different ways to use options as well, and futures and derivatives, and that can help, I would say, level out a lot of the volatility. So like I said, John is extremely knowledgeable, a tremendously brilliant guy. Thank you for spending your time and listening to the information we have to share. For those of you who are watching on YouTube, please check us out as well on Spotify. And those on Spotify, please check us out on YouTube as well. So that's the end for me. And now I hand it over to John.
Yeah, thanks for having me, guys. As mentioned, John Devine from Blockfills. I'll say about Blockfills real quick. So Blockfills, we're an institutional market maker serving the digital asset ecosystem. We provide liquidity and technology to OTC desks, hedge funds, exchanges, basically any institutional participants in the market. Before Blockfills, I started my career as a market maker in precious metals, interest rates, and energy markets at the Chicago Mercantile Exchange. I also did some market making at the Intercontinental Exchange. And then my transition from traditional markets to crypto, I became an execution specialist at the world's leading Ethereum hedge fund, where I was actually introduced to Blockfills when I was scavenging the market for good liquidity partners and technology partners. And I since joined Blockfills about going on 4 years at this point, serving institutional crypto.
So it sounds like, John, you've had a very, very boring career.
Yeah. yeah, real boring. I've been falling asleep at the wheel, so to speak. No, it's been a lot of fun. Let me tell you this. From this background, being able to be a market maker first, before going into the buy side, and then of course now I'm back to making markets. But that really did help me kind of understand how markets work, and price discovery and market facts, which we'll talk about later in the show, hopefully. It's been a heck of a ride, and I'm happy to keep going.
That's awesome. Well, I know we're going to talk a lot about the crypto markets and stuff, but if you had your old hat on and you were in the traditional markets, what are the things that you'd be looking at today that might be opportunities, and what are some things that may be concerning?
Yeah, so I actually, when I approach a marketplace, and this is what attracted me to crypto in the first place, is I view all markets basically the same way. Markets are, they're a combination of a whole bunch of human instincts coming into play for an underlying asset. That asset could be gold, that asset could be Bitcoin, it could be oil, it could be the S&P 500. It's really an amalgamation of human instinct and greed and fear coming together to find price discovery. So looking, with that said, I have really trained myself to kind of funnel out noise and focus on market truths. Okay, so what do I mean by market truths? Well, you can start really basic with like liquidity. How liquid is a marketplace? You'll often notice if liquidity in a certain market for a certain asset is low, there's often going to be accelerated volatility. There's not as many participants in that market, so the moves, the swing highs and the swing lows can become exaggerated. And then of course, more liquid markets, price discovery is going to be, a little bit slower in terms of that volatility. So I start with that. What market am I dealing with? How liquid is it? And then I like to go to these fundamental facts. So what do I mean by that? If I'm looking at gold, or I'm looking at crude, or I'm looking at Bitcoin, I start my analysis on a yearly time frame. Okay, so I'm going to zoom way out into my perspective. Start with a yearly focus. Really, I'm going to look at the prior year action of that market and identify some critical information, like what was the prior year close, what was the prior year high, what was the prior year mid. Okay, so now once I've started there, I can really narrow down my analysis. I can go to a quarterly view. Okay, so when I'm looking at a quarterly structure, I'm asking myself, what was the prior quarter low, the prior quarter high, the prior quarter mid, and I'll do this to the monthly, to the weekly, and then of course to the daily. And that's really my approach. So I don't like to speculate in the sense of where are things going, or what's kind of macro, but I like to be very micro in my analysis, even to the foundation of, is a market trending or is a market not trending? And so that's my approach.
Yeah. So what are you seeing today? What are you liking, especially in the crypto markets right now?
So for crypto, what I like is the opportunity to manage risk, but also expose yourself to some positions, to a long or short position. So like, for example, if you're a Bitcoin, let's say you're committed to your Bitcoin investment. Okay, so you're long spot Bitcoin. Now, what can you do? As this market develops, since Bitcoin has some pretty large swings, the volatility in Bitcoin is elevated relative to, like, let's say gold or the S&P 500. So what I like to do there is, if volatility is elevated, I like to look at the derivatives market. And I like to say, okay, I'm long spot Bitcoin. How can I sell some of this volatility into the market while maintaining a long position? So this would naturally lead to a covered call strategy. I like this a lot for Bitcoin right now, especially Bitcoin holders who are not trying to pick direction on an intraday or weekly basis. You own Bitcoin and you sell monthly call options. I think there's a whole lot of value in just approaching Bitcoin from that perspective. And then you can even go further. And by the way, this would go for any asset, but I'm long an asset, I sell a call option. Okay, now I have upside to the call strike, but I'm also generating a yield. And the next thing you can do, instead of generating a yield and putting yield in your pocket from selling calls, I can actually buy protection for free. Okay, so that's what I would like to call a zero cost collar. I'm long Bitcoin, I'm selling call options on the upside. Let's say, for example, I'm selling the July 28th, 33,000 strike call options. And then I'm going to look and see what put option, what protection can I purchase for free? And I like to have that position up, long spot, short the call, long the put. That's kind of what I'm looking at these days.
Oh, that's awesome.
Yeah.
And I would say it's kind of funny because you see a lot of the traders that are out there and the people that are on the YouTube and all that jazz. And I mean, they're just playing the long short spot game, right?
Yep.
They're trying to time a market, which I think we all understand can't be timed. And that's just traditional in any marketplace. And then at the same time, it's like, it's kind of a pain in the ass when you get into the crux of it, because in these times, especially with uncertainty, the last thing a lot of people want to do is sell their Bitcoin, sell their Ethereum,
Yep.
right?
Yep.
And they're kind of stuck between a rock and a hard place.
And I think it's a beautiful way to provide a foundation for why you would continue your education in Bitcoin markets. Okay, so you've already got your thesis. Let's continue with Bitcoin. You've got your thesis. You want to be long this asset, but every day there's a new headline that's moving this market. Obviously, last year we went through a whole bunch of nonsense with counterparty risk, and that took the market out pretty significantly, as we all know. So now this is like a perfect scenario for someone to expand their market education and start learning about risk management techniques and real yield techniques. And that's where I think a lot of people should be driving their attention to right now.
Talk a little bit more about what you're looking at these days. It could be in the Bitcoin, could be Ethereum. Let's talk and dive into some of the market truths that we're seeing today.
Yeah, well, you know what? That might be a good segue for me to share my screen and kind of talk to you about how I approach markets. Can I share? Can I go ahead and
Yeah,
share?
yeah, go ahead. So for people who are listening on Spotify or any other podcasting platform, if you want to see what we're sharing right now, please go to our YouTube channel, Twin Shores Financial. You'll be able to see what's coming up on the screen. So John, why don't you continue?
Yeah, sure. So if for all those who can see the screen, this is Dharma Capital Trading, okay? And this is a strategic partnership I have. The gentleman behind this technology, his name is John Slazis. He's extremely well known in Chicago and New York trading circles, going back to the early pit days in the mid 80s, before electronic markets even existed. John developed this market fact based approach to market analysis and really defining how you view markets from a systematic perspective. So what we're looking at on the screen is a heat map, and you'll notice that these are all crypto assets. These are all digital assets, and Aave, Cardano, Algo. We have Ethereum in here, Polkadot, Litecoin. You can kind of see the whole list here. And what this heat map is telling me right away, and the print might be a little small for people to see, but for your guide, this heat map is telling me, is a market trending or non-trending? Okay, number one is, and if you can see the red boxes, those are going to be downward trending markets. And crypto is a very highly correlated marketplace in general. So you'll often see this when particular assets start to downward trend, a lot of the market starts to downward trend, okay? And you'll see a couple of these have different colors. And like this one, for example, or we can say Cardano. Cardano's in a non-trending state. All right, so that's these are the first facts that I want to look at every day. Every time I start my trading day, I check my heat map. Okay, and let's pause real quick and define trend and non-trend. Okay, these are absolute market truths. A positively trending market is called a bull trend. All right, a bull trend is higher highs and higher lows, period. Okay, a negative trend is called a bear trend. That's going to be lower lows and lower highs. All right, that's a market truth. There is no arguing that statement. And then, of course, there's going to be non-trending markets where there is no higher high or higher low. It's kind of just a higher high, a lower low. There's just chop, as we will say. So my first step is, are markets trending or non-trending? And then the question that everyone should be asking is that if we're in a positively trending market, a bull trend, at what point does that bull trend become invalidated? Okay, that is a critical thing.
Right.
Yes, to understand, because if you have a higher high and you're looking on the retracement, you're looking for that higher low. At what point would that higher low become invalidated, right? And so that market truth would can really be understood there. And you'll find the more you dig into this kind of stuff, those areas where the invalidation point or inflection point, you could say as well, those are going to be highly liquid areas in the chart for trading. There's a whole bunch of trading going on at those inflection points. So I like to start with the heat map. Are markets trending or are they non-trending? Great. Once I identify a market I want to trade, and by the way, with this system, you can click on any one of these markets and you'll pull up the market color. As you'll see on the right-hand side here, I got market color for Bitcoin. In this current example, Bitcoin was in a bear trend correction. Okay, and so we go through what does that mean, and then what are some strategies that can be applied to a bear trend correcting market and all that stuff. But the market truths in structure, we put those right on a chart. Okay, and so I'm showing that here on the screen now. We call this price map. This happens to be for the S&P 500, but we do price map for all the digital assets and whatnot. So that's really my approach. That's how I'm taking a look at things. And price map has been invaluable for me, and not only for positioning, but also for risk management. The example I'll say there is like Bitcoin. How do you know where the strategy I talked about before, the covered call? How do you know where to sell the call? Okay, well that answer lies in market structure. Okay, so you can really get granular with how you take these market truths and build a strategy around it.
That's awesome.
Yeah.
So where do you think most people get it wrong?
Not understanding market truths, period. I've talked with extremely seasoned traders actually who made their names in algorithmic trading. Okay, and this is looking for like market inefficiencies in pricing. It's called arbitrage, where you can take a risk-free trade. Even some of these really sharp traders, they're still not quite there on market truths. It's incredible. And then so if that's the professionals who are still kind of not there on market truths, although they're successful professional traders and they found arbitrage strategies or whatnot, that means that retail or semi-professional traders are certainly behind the curve on identifying market truths and finding faith in fact-based trading. So that is, and it's also why I started this partnership with Dharma Capital to bring some market truth to crypto. Okay, because in crypto you're going to see a lot more people who are taking their first step into trading or their first step into markets is with crypto. In traditional finance markets tend to have a little bit of deeper experience trading. Crypto, there's a whole lot of people who are pretty new to markets, and so I want to be a steward and bring truths. That's where most people get it wrong, trying to help people get over that curve.
Right. I mean, traditional markets have been around for over 100 years, and
yeah,
what are we basically at year 5, if you will? I would say on the crypto side.
Yeah, exactly. If you're trading the S&P 500 every day, you found something that works and what works for you. But if you're trading Bitcoin, there's a higher probability that you're a little bit fresh or more fresh, relatively speaking, to markets and trading. So that's where the education is super important. And then really getting rid of the noise. I'm kind of new. I'll give an example of that. I'm fairly new to this whole crypto Twitter, or I should say finance Twitter, and that it's a huge resource for understanding getting news fast and kind of staying on top of new projects and being able to communicate with projects and whatnot. But there's a whole lot of nonsense on those types of platforms when it comes to trading and managing risk, and really it's about looking past the noise and the people who are trying to package something fancy up and getting right to the truth.
Right.
Yeah.
Right. Yeah, we see a lot of that in the crypto side. We see a lot of that in traditional finance, like folks that are out there trying to give advice on how to make money or share knowledge or whatever. I mean, we watch half the stuff and we're like just shaking our heads at it.
Yeah, there's a whole lot of garbage out there, and so I've opened up a trade room, and the idea of that is we only want serious people who are serious about taking their education in markets to the next level and learning how to manage risk, create yield, and create optimal trade execution strategies in a semi-professional or professional manner. We want to get those people kind of away from the noise. Put them in a room with a bunch of pros who are hyper focused on truth and facts, and build portfolios that way.
Yeah, that's awesome.
Yeah,
that's awesome. No, that's cool. We're making fun of we laugh about my Twitter because I just like to tweak people on Twitter for fun.
Yeah,
I,
that's fun.
I find it to be kind of funny.
Yeah, he causes drama.
I like to give people a little off balance. It's fun for me. So John, what do you think? What are you seeing in the markets? Not that we're trying to speculate, like we talked about, but
Yeah.
what are you anticipating in the next 3 to 6 months?
Impossible to tell you, and I think that's something to hammer home. So, markets and market analysis, you'll see stuff from like the top investment banks, Goldman, JP, you know, just you go down the list of your top 10 investment banks and their top analysts, and all of them will have a different opinion on where the market's going to be in 3 or 6 months. And these people are paid huge salaries to all day long sit and think about where is the price of the S&P 500 going to be in 6 months. Okay, let me tell you something. Nobody knows where the price of anything is going to be in 6 months. Anyone who claims to know where they think the price of an asset is going to be in 6 months is full of shit, quite frankly. And
wait, we have to disclaim this. This occurs across all markets, including traditional finance. Please understand.
Every market. I mean, you can even talk about like the price of a gallon of milk, which we all expect. Can you believe how expensive the price of milk? Well, how expensive is it going to be in 6? It's going to be $2 more again. You know, we speculate on anything that is a marketplace. Okay, so this is an important question though, because I get asked often, even just casually in conversation when I tell someone, you know, what I do, that, you know, they might pick my brain and might ask that question. It's a completely valid question. But I think it goes back to my point in hyper focusing on market truths and market facts. The market is continuously evolving. That's why if you're an operator in the marketplace, you're trading, you're putting your personal or your firm capital at risk. You need to be I guess, dynamic in your approach. You need to know when you're wrong, and any thesis that you might, conjure up in your mind that makes all the logical sense in the world. Once that trend breaks against you, sorry, your thesis isn't valid. Okay, and that trend is ever evolving, right? And that's why I said when I approach a market, I'm starting with a yearly, a quarterly, a monthly, a weekly, and a daily. All right, that's how I bring myself to the current moment in time. And I'm looking at all these different facts about the market. For example, let's use a weekly time frame. For example, what was the prior week close? What was the prior week high? What was the prior week low? What if a market is trending and we're in a bull trend, where does the trend invalidate? Those are the things that people need to focus on. And although it is fun to speculate on price,
Bitcoin to $1 billion, according to Fidelity.
Yeah. Bingo. Hey, those Fidelity analysts, those are pretty sharp analysts, right? So
they got some cushy jobs and some cushy salaries, man.
Yeah.
They show up at 9, they leave at 5, and they take their lunch at 12. It's amazing.
That's right. It's a nice life.
I'm not bashing. Listen, this is not defaming or bashing anyone. It's just you look outside your office window at someone. Sometimes you're like, man, that is a cushy job. That's a good life.
Of course. Yeah. We're certainly not talking down on this role in financial markets. Forecasting there is a place in the world for forecasting, but if you are trading personal capital or firm capital, you got to block the noise out. Okay, it's fun to read research reports. It's fun to read analysts. They're super sharp. At the end of the day, it's your money at risk. How are you going to manage it?
Right. Yeah, and I think for me, in my opinion on this, or from my observation, I should say, it seems like these types of strategies, running the collars and all that stuff, with all the uncertainty in the farming and the staking markets and all that fun stuff, it seems like a better way to generate yield in a portfolio.
Yeah, well, let's talk about that. So Ethereum is probably the best one to zone in on when we talk about staking yield. So you own Ethereum. If you own 32 of them, you can stake the Ether. Well, I think there are even some protocols that allow you to do it with less than 32. But let's just say you stake your Ethereum and you can earn a reward by contributing your Ethereum to a node validator who is validating transactions on the blockchain and being paid fees, and then they pay those fees out to stakers as a yield. And so this is a certainly interesting approach to how to manage protocol validation and how to decentralize node validators in general. But there's also some problems as technology evolves, and like one of the problems is for Ethereum, if you stake your Ether and you try to unstake it, there's going to be a delay. Okay, and it might not be a problem for you, it might not be a problem for me, but it could be a problem for somebody who wants to have their Ether right away instead of having to wait in a queue. So what can you do to generate yield on your Ether that's not staking? And what you can do is the strategy we talked about right away in this show, which is the covered call. But I want to take a second here to just talk about what that means instead of saying sell a covered call. Okay, so a call option is the right to own an underlying asset at a predetermined price at a predetermined time. Okay, so if Ethereum is trading at $1,800 today, what's today? Today's June 7th. All right, yeah. I can go to the marketplace and I can look at the options market for, let's call it June 30th, which is the last Friday of June. Okay. Ethereum's currently trading at $1,840, 1,840. And I might want to say, I want to sell someone the right to own my Ether at $2,300 by June 30th, 2023, which is just shy of 3 weeks away. Okay. Right now, indicatively, over the counter, you could say that 2,300 call option is trading for about $6 per Ether. Okay, you can annualize out that yield, and that yield is going to blow way past the staking yield. All right. Now the risk is that Ethereum goes above 2,300 at June 30th. Let's say it's trading at 2,400. Well, you have to sell your Ethereum at 2,300. Okay, you that's the contract you signed to get paid the yield. But I still like that because it's really just opportunity cost. It's not like you're losing. You still make money on the trade.
You're getting your cash from the sell of the Ether at 2,300, and maybe you lose a little on that coverage action, but most of the time.
Exactly, and it's just. I love the strategy because at the end of the day, the risk is opportunity cost.
Right.
Yeah.
Right. That's awesome.
Mm-hmm. So I think the crypto market in general needs this kind of push on the education side.
Yeah, it needs to become more professional.
Certainly, and we're on our way. I mean, gentlemen like yourselves are certainly ushering in some professionalism to the marketplace. And I do expect that to continue and accelerate. Hopefully, let's say. But yeah, I mean, generally speaking, the beauty about crypto is that it gets you it provides motivation to get educated on technology, and it provides motivation to get educated on markets. And you bring those two together, now you got something real.
Well, and we were talking about that the other day because people have the question. And they were asking, okay, so how does technology impact finance? And my response is, well, finance and technology are one and the same now. They're not separable.
Bingo. Yeah.
Right.
Bingo. And
so
go ahead.
No, and I was going to say, I mean, I've been telling people and sharing this for a while. I'm like, listen, in 5 years, this whole thing's 24/7 instantaneous settlements.
Yeah.
I can buy anything across the world because it brings the spirit of the internet to finance, where it's everyone's connected, everyone's global, everyone has an opportunity. And that's where I think crypto and digital assets have a massive, massive runway.
Completely agree. And the exciting thing for me in particular is that the crypto marketplace, I guess to say it again, it motivates people to educate themselves. It's super hard to get people to stick their head in a book and or read online or get educated on some like blockchain technology. It took Bitcoin going up 100x to get society interested in studying blockchain technology because it's a dry topic, okay? It is, but it's super important, okay? And just like portfolio management, risk management, real yield, those are fairly dry topics. Most people aren't going to go out for a drink and talk about selling covered calls. All right, you probably get some weird looks at the bar or at the restaurant. Okay, but once you start to realize like the self custody of Bitcoin, you know, blockchain technology, my own personal portfolio, how do I optimize all these things? That motivates people, and I'm hopeful that the technology will continue to accelerate that motivation, not just for tech, but also for the finance side as well.
Yeah, and from what you guys are seeing, John, and whether it's yourself and Blockfills, are you seeing a significant difference between what we're seeing inside of the United States versus the innovation that's going on across the world?
100%. Okay, and this is a really tricky talking point. Sadly, if we keep waking up every day to the volatility of regulators, you know, coming out with a new headline and a new lawsuit and a new whatever you want to talk about, that actually disincentivizes education. Okay, and let's talk about Ethereum. You know, we know Bitcoin is a commodity. The SEC's seemingly not going to be going after Bitcoin. But Ethereum is a smart contract block protocol. It's a blockchain that not only tracks who owns what when, but you can also build applications in a decentralized fashion on top of the blockchain. If the American people, and I'll talk about the states right now, if the people in the United States wake up every day and they see headline after headline of, oh, you know, the regulator, the government is cracking down on this technology, no one is going to crack open their Ethereum textbook. I'm saying that facetiously. No one's going to go online and learn about Ethereum and understand smart contracts and the blockchain and how important decentralized applications can be for the general population if they're discouraged and disincentivized every day by our government that continuously frames the entire ecosystem in some type of shady light, which is, quite frankly, an abomination to technological innovation. All right, so that's where I think yeah, go ahead.
But remember, John, it's of the people, by the people, for the people.
Yeah, well, amen, brother. But you know, if we keep waking up to this stuff, and where I'm going with this is, people in the United States, relative to people internationally, they're falling behind on the education curve for blockchain technology. And like, you can even go further. If our government approaches artificial intelligence in the same regard they're approaching blockchain technology, we'll fall behind in that regard too, because everyone's going to be disincentivized to learn about this stuff and innovate.
Well, and we're already seeing that, right? Like your kids from Georgia Tech, MIT, you know, these programmers, they're leaving.
Oh yeah.
And they're going across the world, and I think part of it too is we've fallen asleep on innovation in this country. Like if you look at what's going on in India with their UPI system, their entire lives are on the phone, and they process every transaction at every pretty much retailer. I mean, they're doing over 1 billion transactions now over their phone.
Yep.
So if you're looking at outside the US from what we've seen, and it sounds like you're saying the same thing, I mean, the world's moving really, really fast, and we're falling behind very, very fast.
It's really sad to watch it happen, and like in the finance circles, people they're taking their domicile out of the country. You know, they're not going to open up a Delaware corporation. They're going to go overseas, and they're going to open up something in digital assets, and that to me, you know, there's not only the brain drain potential, but just I mean, of course, we talk about revenues, you know, to our social society systems, right? Via taxation, that's all going overseas.
Yep.
But really, what the sad part, like you just said, is the young talent that's coming out of these prestigious universities in the U.S. And now they got to look and say, well, where am I going to move to if I want to build in these kind of leading edge tech sectors?
Yeah,
Didn't the SEC just sue Binance and Coinbase?
Yes. Yeah. Big drama. All these new coins are now securities. Everything's practically a security now.
Ridiculous.
well,
Yeah.
They did not name Bitcoin, they did not name Ethereum, and they did not name Litecoin.
Yeah,
Yeah,
the three, all pre 2018 coins they're saying aren't securities really, that were on exchanges for the most part. There's some that are in there, but
I think it's worth, on that note, it's worth talking about the importance of regulation, okay? I'm not asking for the Wild West. There's a reason why traditional financial markets trade in regulated environments. There's bad actors in the world, and bad actors go to places where they can easily steal people's money. And if you have something that's unregulated in the Wild West, you're gonna have bad actors. I think regulation, intelligent regulation, evolving regulation, makes a whole lot of sense. Okay, and like you're gonna have even more institutional investment into these technologies if there is some regulation, but it has to be responsible regulation. Some of the statements that are coming out of Washington say to me, they don't even know what this technology is.
Oh, they don't have a
thank you.
clue.
No, they have no
I
clue.
have
They
no
have
idea
no
what the hell is
clue.
going on.
They don't have a clue, you know, or
Well,
they're
and-
dumb. It's one or the other.
One of the things that I'm trying to do personally from inside the industry and traditional finance is to say, like, you could see the writings on the wall. Like in the United States, we're screwed if we don't get on board with this,
Yeah.
because technology is so far beyond where we are on a day-to-day basis that we're massively going to be left behind. And if you look at the populations of India and China, I mean, there's what, right there, almost 3 billion people
That's
instead of 330 million. So people have to, I think, get out of this America First brain of theirs to see what's going on. But you're looking at an industry too, like our major laws came in 1933, 1934, 1940. I mean, we were still carrying stuff behind horse and buggy, you know, pulling bales of hay. You know, we're in the 2020s, man. And at some point, I think it's gonna bring and have a massive impact even on, you know, organizations like FINRA SEC, because they can't cover everything anymore. And even they need to embrace technology in order to get the protocols in place to allow people to safely get in.
Completely agree. And I think it's disheartening to see this from our leadership, and not to repeat myself over and over again, but it disincentivizes education. Okay, and that's one of the largest exports in this country, education. All right, so we're gonna educate, and then we're gonna send people overseas because we won't let them build here in this country because we don't want to take the time to learn about what they're building and learn about the tech. Seems like nonsense to me.
Right. And you have just an entire new world of opportunity with technology, coding, development, creativity. I mean, you want to talk about an opportunity for kids to go to college and then actually have positions ready and available for them.
Yep.
I mean, these kids are coming out of college. I'm watching it here in my home, man. They can't find jobs.
Yeah.
And that's a big, big problem for our young people.
Completely agree. So I don't know where that root cause is. I mean, obviously there's the, you know, the high level administration and, you know, the policies that go from top to bottom. Maybe there needs to be some regime change. Uncertain, don't want to speculate on that. But all I do know is that if we continue on this current trajectory we're on, which is basically regulation by enforcement, we're going to send everything that's innovative in technology out of this country.
Yeah. No.
And it seems what they want though.
Kind of, you know, and what's going to be, you know, like we talk about trading so much in markets, and which is great, and you know, that's why we're all here and what we like to do and what we like to talk about. But there's just so many more applications and use cases for this technology, you know, aside from, you know, Bitcoin, you know, the thesis you want to run with on you know, electronic cash. That's great, but like blockchain technology solves a lot of problems. You know, yeah, I think one of the big problems that's going to emerge, it's kind of like this intersection of artificial intelligence and blockchain. It's like you've seen these deep fake songs that are coming out now, where they take a famous musician's voice and they make it.
Right.
Okay, all right, so we have a problem here. It's a problem about understanding who actually owned and created the song, right? And blockchain technology through, let's just say like through non-fungible tokens is really good at saying who owns what and when. So if I'm a famous musician and I have a track that I drop, I can create an NFT that is basically the rights to that music, and it's time stamped, and now you know for sure that I made that song, and it's from the artist you're looking to buy from, not from some deep fake that's coming up from artificial intelligence. That's going to be a huge deal. Who owns what when? And the more we think about that problem, the more it's going to become obvious that blockchain technology is a huge component in solving for that.
Huge. I have friends that are artists, and they love the NFT world for that specific reason.
Yeah, it's a game changer. It's public and it's immutable, and this is what we're building. Bitcoin ushered in fantastic technology that solved for one of the most fundamental human economic tools, which is money, right? But the technology doesn't stop at money. I saw one of our regulators, we all know his name, I'll refrain from saying it, but he said in one of his latest press releases, we already have digital money. It's called the dollar, the yen, and the euro. They're all digital. And I'm like, you know what? Forget trying to even go down. But he's so hyper-focused on currency. Okay, blockchain technology is not just money. It's not just electronic cash. There's so much more. And this is where I get so frustrated in the overhang of this government, because it's disincentivizing people to go to the next level on the education curve and getting from, okay, money, great, immutable, great, we can track who owns what when, great, but what else? So anyway.
Yeah, and I think no matter what, I think it's coming. I know that when I go and sit with clients who are 75, 80 years old and they're starting to ask me about Dogecoin, one referenced it as doggy coin, which was pretty funny. And Bitcoin and Ethereum, you could see the underground swell that's there and the education that's going on in the conversation. So it'll definitely be pretty interesting.
Yep. Yeah. Another favorite, and I'll be brief. Another big one is decentralized internet infrastructure. Okay.
Yes.
So right now, people don't even think about this problem. All right, but right now there's an absolute centralization in internet infrastructure access. Okay, so if I'm a store and let's say Starbucks, all right, and you walk into a Starbucks, you can access Starbucks internet, right? Okay,
Sure.
but there will be, and there already is technology. One of my favorites is called Packet Cache, that can set up these VPNs for Starbucks. You can walk in there, pay with a digital asset, and now you're on the internet. You don't got to pay bank. You don't got to give away all this other stuff. It's a digital asset transaction. You can approve the VPN access. That's interesting stuff that this technology can solve. And you talk about Bitcoin, decentralized electronic cash, but it works across internet infrastructure. So you got to decentralize the internet infrastructure, and blockchain technology is going to be imperative in accomplishing that goal.
Yeah, I never understood that. When I go into my Starbucks, I have to give personal information to log on the internet every time, and I'm like, why?
Yep, and there should be a way to transfer digital value to the VPN provider without anything else, and getting access to that internet.
Yep.
Well, that's not even half of it. I was reading an article, AWS runs most of the Ether nodes, right? So if AWS servers go down ever, Ethereum blockchain may have big problems. I'm not saying all of them are.
Sure, but going on that point, decentralized data storage, which there's a massive project called Filecoin, and Filecoins, they're in all these lawsuits now that are coming out on Coinbase and Binance. Filecoin is being singled out, and Filecoin actually solved for how do you incentivize a decentralized network of servers and data storage providers and allow them to kind of subvert this centralized AWS world we all live in. So interesting to see the leading decentralized data storage project kind of getting singled out here at the top level of of these recent lawsuits.
Right. Well, and part of it's education, and that's where I think technology helps by spreading information and good information. I think a lot of people, especially the younger generations, that really Gen X, Gen Z, millennials now have over the baby boomers in terms of numbers, and they're waking up to it like, hey man, we're this system we have set up is very, very controlled by corporations, and what's in the best interest of a business and not necessarily what's in the best interest of the people.
That's right.
And like we have offices up in New England, we have, we're all spread out here, but look at the internet. Like I know when I'm in Portland, Maine, I get Spectrum. Spectrum is absolute crap. It's the worst internet service I think I've ever encountered. And there are no other options in pretty much the entire state. And, it's a sunny day or a windy day and you still don't have network.
And that's the problem with monopoly, right? And not having to compete is the level of the service and the customer interaction just depreciates. But I think what, kind of going on the statements you just talked about, this younger generation and how they're kind of looking around at the system and how it works and how it's very centralized and controlled. There's a lot of middlemen when you want to accomplish certain tasks. I think that there's nothing more obvious or no use case more obvious to me anyway than the remittance market. All right, so we have Bitcoin solved for the ability to send value anywhere in the world in 10 minutes or less, or 10 minutes block times. Okay, so I don't have to pay 10-15% to some middleman to send money back to my home country. Let's say someone's come to the United States to work. As an example, they want to remit, a percentage of their earnings back home. Well, if they can teach their family how to self-custody Bitcoin, they can send Bitcoin right back to their family at home without going through a middleman. They save 10-15% and a year on those remittance bills. And then also their family now gets the opportunity to learn about decentralized technology, self-custody, self-ownership, public ledgers, and blockchain. So this is, the system is almost going to cannibalize itself. It's been structured in such a way that is so controlling that eventually that structure is going to collapse because the people are going to be able to see right through it once these tech options become obvious.
Right. I mean, technology is an absolute game changer. So John, what's your favorite part of being in the crypto industry?
Education, period. So the world I come from, when I was making markets in precious metals, for example, there's not a whole lot of teaching that you can do to a gold miner. Okay, so gold mining has been going on forever, and the ability to manage risk for a gold miner, they know what their input costs are, they know what their costs to mine their gold is. So they already know how to hedge that. They already know how to lock in forward prices of gold when they go to sell their gold. They know how to lock in a price that gives them a good margin. They know how to manage the balance sheet risk. There's not a whole lot of education that can really be done there. But like for Bitcoin miners, for example, generally speaking, they're not really optimizing balance sheet and deploying risk management techniques that are very common in traditional markets. So for me, I've had a real pleasure, kind of being a conduit between the traditional world and how the traditional world approaches risk and how this digital asset world can also approach risk and yield. So for me, it's been the education and not just markets, but also the tech. And I also think that, we're at a fascinating time in the world it's kind of like this old regime and this new regime saw it in the late 90s, early 2000s with kind of Web 2.0, so to say. And then, now I think we're seeing it again with going from a centralized web to a decentralized web. That's why I really enjoy it. And then, of course, these assets, since they are so new, there's a whole lot of volatility. Okay, and volatility. I mean, the market, these assets, they really move. So there's opportunity. Where there's volatility, there's opportunity. And once you can narrow in on market truth, market facts, and risk management, you can really make volatility your friend and create some good returns for yourself and your family.
So a lot of people are really hesitant to get into cryptocurrency and digital assets. If you had somebody come up to you and who was extremely hesitant, what would be the first thing you would do to kind of ease their conscience, ease their mind a little bit?
Well, I'd first ask them, what are they nervous about? Okay, why? Why are you nervous? Is it the headlines you're reading? Is it, is it the stuff people are saying at the coffee shop? I try to narrow in on where the fear is coming from, because I think fear is just a natural human inclination to not have to face something. It's like, this Bitcoin thing sounds really cool, but seems super complicated. So let me create a thesis in my mind as to why I shouldn't dedicate the time, energy, and effort to go learn what it is.
Right.
All right. And then they'll come up with a bunch of reasons as to why they have fear. But really, at the end of the day, it's more likely that the individual is hesitant on dedicating time, energy, and effort into learning a seemingly complex subject, although it's not complex once you dedicate the time. But I would try to really zero in on why are you afraid, or why are you hesitant, and is there a possibility that fear and hesitancy is manifesting as kind of a defense mechanism to not broaden and expand your understanding of the tech.
Do you find more often than not it's because people are afraid of the change, or because people are not willing to learn?
I think it's not willing to learn. It's like email, and I'm too young to remember the transition, but when I talk to people a bit older than me, they remember coming up with all these excuses as to why they shouldn't use email. I write the letters. I put the letter in the mailbox. I know it's going to get there because the U.S. Postal Service is going to deliver the letter. Or, I use this fax machine because I've been using it for 10 years and I know it works. And I put the piece of paper in the fax machine. I put in the address. I press start and the paper goes through the machine and it gets sent. And I know it gets, okay, they come up with 1,000 reasons not to learn how to log into an email account and write an email and then find the other person's email address and then press send. All right. You had to go through that, just excuses, quite frankly, as to why they shouldn't learn about how to adopt new technology. And then, of course, with tech, every adoption cycle, the problems that are being solved are going to be a little bit more complex. Okay, so solving for the ability to send an email versus solving for being able to transact value anywhere in the world to anyone in the world, that value transfer problem, it's a little bit scary if you don't want to take the time to learn.
Yeah, that makes total sense.
Tim, what was that time like when you first started using email?
Jeez, I gotta think about this. It was in college. I think I got my first email address when I was in college. I mean, geez, I think the computer basically just came out when I was in high school.
I think
And I can tell you what, I
remember.
remember that when I first got on a computer, or no, it was actually high school. I think it was the end of high school. And I logged in and I went on to web crawler. And I just went, holy shit, hell yeah. I still get chills about it because I'm like, I now have, because I love libraries. They're my favorite spot in the world. But now I had access to information right there. And I'm like, oh, let's go.
Yep.
But yeah, it was, it was funny. And I had some friends that were in computer science that were really good hackers. And at that time they had the chat rooms were really big. So my freshman year was pretty funny. We had one guy that stole the code off of my other friend Chris's computer. And we knew that this guy would go onto the chat rooms and, every night and do whatever he was doing. So my other friend Chris hacked in his computer, put in a back door, and all of a sudden he would shut him down from the other side of the wall. Yeah. And the whole computer would just go boom. And you would just hear 2 a.m, the cursing coming through the walls. But yeah, man, I mean, Holy crap, when we first got access to computers and then got on the internet and had access to information, we were never the same after that.
Yeah. Yeah, but do you recall, in that time frame, do you recall a percentage of your buddies that were saying, no way, I'm sticking to the library?
No, because I thought it was just everyone was curious about it. Right? Like we didn't, but in the system or the school that I was in, we were encouraged to ask questions and think and question everything. But it was more about they encouraged the intellectual curiosity, if that makes sense.
Yep.
So we were definitely on the forefront of having access to computers and learning how to use them on a day-to-day basis. But I think even anyone that was skeptical, once they sat down and started to look at it, like it just hits you and you're like, I get it. And this thing is incredibly powerful. And that's what got me into the crypto space, is because when I did my homework on the blockchain and I did my homework on Bitcoin and I did my homework on Ethereum, and it hits you, you're like, holy crap, this revolutionizes so many things across the world. I mean, like you said, it's not just currency, right? This revolution will revolutionize the healthcare industry. It'll revolutionize and is revolutionizing the food industry. It's going to change the real estate industry. It is going to have a significant impact, I think, across the board. I think everywhere.
Everywhere. And AI is going to accelerate it.
Oh yeah. Yeah. I think that the AI thing will be very, very interesting. And I think the biggest thing that people fear with artificial intelligence, and listen, we've been using quantum computing in finance for, John, how long now?
Yeah, a long time.
Yeah, like 10, 15 years at least. Yeah. So it's just becoming mainstream. My whole thing is, as long as you have a human just kind of overseeing the computers, there's nothing wrong with that.
Yeah, I agree, and I do hammer that point home on the importance of blockchain technology for identifying who owns what and when, and then even more so like who created it. And that's going to be super impactful tech, and that should illuminate for a lot of people. It's funny because the entertainment industry is such an important driver of social conversation. And so now that I think there is some pressure being felt by, and it's like an attack being felt by the entertainment industry, and in terms of AI and some of these generative stuff that can replicate voice and sound and image and all that other thing. So I think who's really going to bring blockchain technology into the conversation in everyone's living room is going to be the people we listen to on the radio and the people we watch in the movies and on Netflix. That's going to really accelerate the conversation.
On YouTube, so I came across a ChatGPT did a commercial with Trump for orange juice, and then it did one with Biden for Dairy Queen. Oh, I was rolling on the floor. Like, you could still tell that it's not real. And we were talking about this. I don't remember if it was a market update or a podcast. But now Bloomberg Television, they're having commercials now done by AI-driven personalities. And the comment from one of the broadcasters, she was like, "Great, I'm out of a job."
It's super fascinating. It really is. I saw I was at an investor summit maybe 2 months ago, and they were taking the quarterly earnings report from a company, and instead of having the CEO kind of run through the earnings report and all that stuff, they had an AI generative person on the screen, and you couldn't tell that it wasn't a real person. It looked just like a real person, and the lips were moving, and it looked like every word that was being said from the quarterly report by this AI generated, I guess you call it an avatar, but it was indistinguishable from another human, quite frankly. Even the lips were just saying it exactly how you would think it would be said. we're about to see some very cool, and I guess to go back to my fears stuff, but it almost frightening stuff. That's going to take a lot of people a long time to digest.
Yeah. Yeah, and you see some of the stuff that they do with the drones and the army technology. It's like, really, do we have to go there? But but with the reasonable programming and stuff to work through, there are going to be a lot of things that I think are going to change.
Agreed. Oh,
Yeah.
it's gonna be monumental, and we're seeing it in trading too. I mean that now the artificial intelligence is being used to just data mine, and like obviously we've been data mining for 20 years now, but I mean the capacity for the data analysis is changing every day basically, and now we're seeing some really cool stuff happening, like in a liquidity provision perspective, market making, trend following strats, finding market truth. We're able to use these technologies and leverage them to find edge.
Yeah. And from kind of one of those things that looks like it's like Gen X is going to be the crash test dummies for all this stuff. But by the time it gets down to Gen Z millennials, I mean, you guys will have all this stuff figured out, no problem at all.
Yeah, I'm with you. I'm excited. I mean,
Oh yeah.
There's a little bit of fear, it's human instinct to have a little bit of fear for stuff that seems like it could potentially be threatening. That's natural. How do you work through that fear? How do you digest it? And then how do you leverage, what was once scary and turn it into something that can be beneficial to you as a human?
Right. Yeah, and we are already starting to use some of the AI on our own. I mean, we're looking at how to use it from a trading perspective, how to use it from, a numbers perspective, and thinking about maybe redefining financial planning software and forecasting. We're looking at even from, it's not necessarily there yet, but even from a marketing and social media perspective and gathering information, like we're taking a look at all this stuff and how we can potentially use it in our business, because we're not afraid of technology, and I think if you really embrace it, it's definitely going to set you apart.
Definitely. I mean, winners and losers are made by how fast they're willing to adopt, and you even see that in the natural world. How fast does a certain species adopt to the changing environment, and that separates what species lives and what species dies out. And it's kind of odd to say it like that, but there's certainly a parallel of that into our human society.
Right. I'm a big golfer, man. If I can have some of my workload taken off my plate, not that I don't want to work, but if it frees up some more time.
Amen.
Amen. So John, any parting words of wisdom that you would have for people and what you're thinking about in the crypto space?
I kind of hate to just say the same stuff, but really, for those who are listening to this podcast, number one, thanks for your attention. Hopefully you could shed some light on some interesting topics here for you. And then for those who are engaging in portfolio management, either personally or on behalf of client capital, really take a hard think about the topic that I presented here on identifying market truths and identifying market facts, and kind of putting up the blinders in terms of all the other noise that comes in. One of the beautiful things about the internet is the access to information, but there's a double-edged sword there, certainly in terms of bombardment. So I would leave you with the thoughts on market facts, risk management, and then yield through derivative markets, and taking the time to understand what is an options contract, what is a futures contract, why were these instruments invented to help manage risk. And you can follow me on Twitter at I am John Devine. I post on market truths often and some thoughts on blockchain. And then you can find my company Blockfills, as we're serving institutions in the digital asset space at blockfills.com. Always happy to have a conversation.
That's awesome. Well, John, thank you for your time.
Fantastic.
Yeah, no, thank you guys. This is really, really great. And actually, my mind's spinning. I got a lot to think about from this talk we've had. So I appreciate it.
Awesome. Well, on behalf of Twin Shores Financial, thank you everyone for tuning in. And if you enjoyed this podcast episode and you want to continue learning on how to be more financially free or more about crypto and digital assets, please tune in next week for another episode or check us out at twinshoresfinancial.com. Please don't forget to like, share, subscribe, follow us on all social media platforms. We are Twin Shores Financial.